Good morning, everyone. This is IronFX research team. I'm here with my colleague Peter Iosif, and my name is Angelo Zitis. We are bringing you the week ahead comment. Peter, if we can proceed with the US.
The US is coming out of an employment report on Friday with mixed signals. Fundamentally, the greenback could be influenced by Mike Pompeo's visit to China this week, and we could say that it could spur some further developments regarding the US-Sino trade conflict. On the financial releases side, it would be notable that the inflation rate for September is coming out, and which could also be sending some mixed signals. Overall, I would say that the US dollar at the current stage is at crossroads, and more or less, I would like to say that the bulls may not have said the final word yet.
Thank you. If we can move to the UK.
The UK across the Atlantic, GBP fundamentally may be dominated by Brexit headlines, as EU officials last week had stated that they are pretty close to a deal with the UK about Brexit. On the financial releases side, the GDP growth rate release, which is expected to slow down, could negatively affect the pound. Overall, the pound, once again, as it seems to be more Brexit driven, should there be any positive further developments in the Brexit negotiations, could get some support.
What about news from Eurozone?
The Eurozone and the common currency was heavily influenced last week by the Italian budget deficit issue, and we could see that continuing in this week, as practically the repercussions of the deficit on the Italian national debt level are expected to come out this week. On the financial releases side, we would like to point out and stress the industrial production growth rate of the Eurozone late this week, which could also support the Euro somewhat. Overall, we could say that near the end of the week, the financial releases could support the Euro.
From the Asian front?
Moving further to the Far East, the Chinese are set to release their trade balance figure. Now, the trade balance is expected to be a narrowed surplus of $21 billion compared to prior reading of $27 billion. However, the export growth rate continues to be strong at 9.1% compared to prior reading of 9.8% and could provide some support for the AUD. But leaving aside somewhat the Forex market, let's talk about oil. What's your opinion?
We're coming off a very good week for oil prices. We saw a bullish market within the past week, but we had some news starting from Friday from the US that Washington could be exempting some countries with the potential of eventually zeroing supply from Iran. The oil market remains fundamentally driven by the Iranian issue, and countries depend on how the solution of the matter will affect the oil prices. Overall, today, Saudi Arabia stepped in and said that they will be covering for any shortfalls from Iran, and also Qatar energy minister stated that the oil market is in balance, basically confirming OPEC's plan since the beginning of the year, which is to balance oil prices, demand and supply. Last week we had a surplus of 7.9 million barrels in the EIA weekly figure, which should have decreased oil prices, but instead oil prices were seen moving higher. And our opinion is that as the Iranian issue remains unresolved, more volatility or support will be given to the oil prices. On the other hand, if the US is willingly going to enact waivers on countries, we could see oil prices moving downwards and could have a more balanced price overall.
Okay, more or less, people, that should wrap up the week. And we would like to wish you, me, Peter Iosif, and Angelo Zitis, solid trading for the coming week.